Juan's going to share his screen, and we're going to run through an actual illustration of how he shows it to a potential client, explains it to them, and then the word tracks he uses. And as you can hear, Juan is a polished, but he's not. He's just
I'm a normal guy. I'm a
normal guy who works hard. So you're just a normal guy that works hard. That's how you become successful in life. Fascinating. Everyone's, I thought there's always these magic pills you've got to take. Hello, everybody. Grady Paulson here, Family First Life America. So excited to have Juan Franco on with us, who is, by my math, the #1 IUL producer last year, and most likely on track to soon be the #1 IUL producer in the history of Family First Life, leading a team doing nearly 700 families a month. Personal best month has been 250 families protected. Already qualified for Hall of Fame this year, and all-around swell guy who is just very, very good at helping make the complex of investment-grade life insurance become simple. And beyond excited to have him on here today with us to break down IULs, help you guys understand better how you're leaving money on the table by not approaching every single potential client with an opportunity for that. And then we're also going to have a section where we're going to run through an illustration. Who doesn't want to see an illustration explained by the #1 IUL producer in the history of Family First Life? This guy does. So, Juan, without further ado, beyond excited to have you on here. Thank you for being able to join us, and I'll pass it over to you, my man.
Thank you, Grady, for having me, and it's a pleasure. I'm very honored to be here with you guys and just to share whatever you guys can learn, because it's nothing. Pretty much, I mean, like, just everybody has a little bit different approach, and I started just like everybody else. I in 2020 in July, I basically started as a part-time agent doing mortgage protect. No, actually, final expense my first 6 months. So I was going home to home, just like everybody else, and then moved a little bit to mortgage protection, and then after that, I kind of started doing more of the IULE on Mutual of Omaha, and that was the mortgage protection. Very intrigued because I didn't know about IULs, so that's the main thing that I had no idea, and being and didn't know about IULs, and I was kind of upset that no one had ever told me about something that I could permanent and grow my money tax-free. So that was kind of upsetting to me that I was putting money for my daughter. I have investments. I had a company before and everything, and then did not know about. So I kind of started learning more and more, and lo and behold, I started selling IULs, and now I would say I just kind of help people that are looking for it. With the volatility of the market and the taxes going up, IUL has become a very, very hot topic. And then so I think everybody that knows about IULs has taken advantage of that. So I would say everybody has the same opportunity to let people know. I would say don't quit what you're doing. If you're doing well, if you're already doing excellent, just keep doing what you're doing, and then just add something to your bucket. I'm basically trying to learn more about also annuities, which is a great thing for volatility, stability of your money, and you can put people in a better place. So, and having the SRS team behind us that helps us, kind of like, I had no idea how to put things together, but then we have a team that does that for us. Many IMOs don't have that. Many other companies don't have that, but we have that advantage that actually they put it together. Like I just reached out today. Hey, what about this annuity? What should I do? Hey, just send me the paper. Just send me this. I'll take care of it. So like, who will do that?
Yeah.
And I get the commission. You know, they're doing the work and I get the commission. I just get to sell it. That's it. I mean, sell it, no, I just get to tell people about it and educate them about it. That's what I do. I'm an educator of the product. And whether people benefit from it or not, they're going to decide on it based on the presentation that I give them. And if I'm a good educator and I can fit to what their needs are, then they're going to probably go with what I have. But I don't call myself a salesperson. I call myself an educator of the products that we have. And if I can educate you on what I have and it benefits you, would you like to apply to see if the company approves you? If the company approves you, then you have time to decide whether you want to keep that or not. How does that sound? Pretty good? Okay, great. Let's go for it.
Yeah.
So that's pretty much the whole system is basically helping people understand that there's a product out there that can grow their money tax-free. So as people know, IUL is if you put money into it, it's gonna go into two buckets. One bucket is gonna go into the part where it protects people, the life insurance and the critical illness and so forth. And then the other bucket is going to grow their money. And that growth of the money can be tax-free by taking loans out of the IUL. So because of that, it's a huge thing. It's a permanent life insurance, something that people can carry for throughout their lives. And after the 10-year surrender period, then they have a life insurance that is paid for. And then so they have life insurance that is paid for, plus they can grow their money substantially. And you can show them a better way than just a 401k where they can retire tax-free. I just posted a video basically on my channel where a guy that is talking about if I was the president of the United States, I would put every baby on a $700 basically $7,000 program for every baby, so every will be a millionaire by the time they're 65, because they will put that money and then let them grow it. And then so if we can put every baby out there on an IUL, we will accomplish that. They can start with $50 or $100. If they start with $100, even better. They will have insurance for the rest of their lives, and they will have plenty of money when they go to college, when they get married, when they buy a house, when they buy the first car, in anything they want to do. No penalties, no taxes. What a wonderful thing. You know?
Agreed.
I don't know, Grady, if you had a 529. I was brought in with, I came to the US. I'm not from the US. I came when I was 19, but I basically put my daughter into a 529. I put a lot of money into it. I put stacking money for her so I can pay for her college. 4 years of college, I had extra money, and I cannot use that money until she turns 25 because they will penalize to do that.
Right.
So if I would have had a IUL, I could have used that money. So those are some of the things that I see that people need to be educated about the IUL. It's a very good product, and it's basically, so if you want, Grady, I mean, I can keep going on and on about the IUL. You know, if we can show people between you and I, like if you are my client, how I will design an IUL and what questions
I would
we will
love
ask.
to. If before we jump into that illustration, what I would love is,
Sure.
what are your interest piquing statements? Like, what are you saying to, you've got John and Mary on the phone. Maybe they make 150 combined. They're saving a few thousand a month. What are the questions that you're asking, statements you're saying? What are the things you're doing to get them to the point where then you're going to show them, all right, well, let me draw up an illustration. Let's set up another meeting. Let's get the life insurance handle. I mean, whatever that is like. So you gave us kind of a very broad statements, but what are the Franco-isms? What are the one closing lines that maybe you say that people go, oh, well, you've got them checkmate, right? When you say this line, it's over because they're not going to say no. So what I'd love if you've got 1, 2, 3, 7 of those lines that whatever you're saying in that, 3 to 7 minute presentation period that creates so much interest where they do, want to then see the next phase.
And one of the things is having the right leads if you're selling IUL. So you just mentioned some of those leads. If you're getting an IUL lead, that means somebody's been looking at it and they're interested already into an IUL. So it becomes your presentation becomes much easier. Now, if you are doing a mortgage protection and you want to get into an IUL, it's a little bit more, it's kind of like asking, hey, do you guys have a retirement plan already in place? So if they have a retirement plan, what kind of things do you do? Like 401k, IRA, what do you do? And then says, what was the main reason that you were looking into an IUL? Because if they're looking to an IUL, what was the main reason they were looking into that? And typically people will pull out, hey, the reason is because I wanted tax-free growth, or because I wanted to be my own bank, or I wanted something other than that. So it's kind of like once you find the why, then you concentrate on that part. That's kind of my part on as far as when I'm talking to a client.
Okay, say I want tax-free retirement. How does that work?
Great. Well, actually, that's one of the main reasons a lot of people are looking, because as you know, taxes are gonna keep going higher. They keep, I don't know if I was you, would you rather pay taxes right now or pay taxes 30 years from now?
I know the debt keeps getting up and up and up. So I'd imagine paying taxes now would be better.
Right. And that's kind of one of the things. A lot of people want to postpone taxes, but then what they're doing is actually going to be getting paid a lot of taxes in the future. And will you rather pay taxes on your seed or on the seed or on the harvest?
Yeah. Okay.
Usually the seeds are smaller. That's your little money, and your harvest is a lot bigger. Wait to pay taxes at the end, you're gonna have to pay a lot of taxes to Uncle Sam. And if we can avoid that, would you be interested in hearing about it?
Of course. So say I want to bank on myself, or I want to fund my own car purchases, that type philosophy. How do you explain that?
Yeah, that's an excellent typically that is one of the things that I love doing. Is one of the areas where a lot of people, they like to have availability to borrow money out of their own without having to go to a bank. And I can show you an example later on how that will work for you. Okay. So in those are more on the illustration side. So I can show you kind of like that part. So
perfect.
Anything else, Gary, you want me to jump onto it?
Maybe what are your favorite companies or products? Companies and products, and then what's your ideal customer? And then what's your, what are your top type 3 customers that or potential clients? So companies and then clients. I'd love to kind of hear those as we're trying to, really educate new agents on who to look for and where to go.
Companies, National Life Group is definitely my favorite. F&G is good, so I like them. Mutual of Omaha is great. So those 3 are pretty much my go-to companies. And then as far as like clients, I would say anyone that makes over $30,000 a year is a qualifier. I will not look for anybody that does less than that unless it's somebody that lives in a household where the household makes more money. So they're not depending on, because you don't want to put people on a monthly that they're not going to be able to maintain.
Yeah.
You know, so if typically an IUL, I would say on an average is anywhere from $300 to $500 per month. You know, so that's kind of like on an average. So if they're taking 10% of their income, so you're talking about anywhere from 35,000 to about 60,000 of income, they could do an IUL like that.
Okay.
They're not doing anything else. Like if they're not doing a 401k, you get truck drivers that don't have anything like that, or people that have their own business, they don't have anything like that, but they're trying to put money away. So that's that's my favorite ones, I will say.
What is your always response like for the people that are like, you know, I'll figure it out when I'm older, or the government will take care of me, or like how, like, I mean, we don't want to try to sell people that don't want to buy what we're selling, right? But sometimes we've got to educate and challenge people a little bit to like have some personal responsibility about their retirement, to understand that the world's going to be more expensive, and if we don't start what we don't pay for now, we're going to significantly pay for in the future, right? So do you have any kind of educational lines that you give to clients that helps them kind of wrap their head around this product more?
I typically just I find out also kind of if they have any type of what is important to them. If life insurance is one of the main things that they're kind of like also trying to acquire, then it's pretty easy sale at the point, because the IUL sells itself. But then if they have a need for life insurance, it's even better. But I sell to people that have plenty of life insurance, because I don't sell it as a life insurance only product. I sell it more as a vehicle for them to grow their money tax free. And then I'm gonna set up their minimum amount of life insurance that I can, so I can grow their money the fastest. And then so if I can do that for you, I'm gonna help you grow your money tax free throughout your years. Now, this is gonna be a long-term plan. This is gonna be somewhere around, 10 to 15 years to actually see some of that money, and then that way you can become your own bank. And then so if I can show you that, would that be something that you'd be interested in?
Yeah.
Okay.
Yeah. Yeah.
So you want me to show you now?
Yeah. Yeah. When you've got everything to gain and nothing to lose, John, let's just take a look and see what it looks like.
Exactly.
So perfect.
Exactly. As you can see, Grady, I'm not like you expect, like I'm gonna be like a super sales person. So it's kind of
You're
like,
gonna start spinning plates and juggling fire, and
yeah, like,
your
oh
eyes
my God,
closed.
this guy,
Like,
I'm not a Steven Giordano, so it's kind of like, I don't do all but you can do quite a bit of sales here. And that's the exciting place that you can see me. If I can do it, then you guys can do it. So it's like, nothing special.
what's
here.
your just for some excitement, what's your biggest policy you've ever sold? Your biggest monthly?
I think it's probably like 90,000.
That's a good one. That's a good one.
Yeah, that's a good one. But then, the Easton just closed the biggest one
saw that.
in
That's
FFL ever. So that when that comes through, that's gonna be an amazing one.
Yeah,
So,
very cool.
yeah.
I love it, man. Okay, so perfect, guys. So right now, Juan's gonna, China, you might need to make him a co-host. Juan's gonna share his screen, and we're gonna run through an actual illustration of how he shows it to a potential client, explains it to them, and then the word tracks he uses. And as you can hear, Juan is a polished, but he's not. He's just.
I'm a normal guy. I'm a
normal guy who works hard. So you're just a normal guy that works hard. That's how you become successful in life. Fascinating. Everyone's, I thought there's always these magic pills you've got to take. So
like, people expect something. Let me see. How can I pull this out? Okay, there we go. So I'm going to do a National Life Group illustration. So for those of you who know National Life Group, then great. If you don't know, National Life Group basically has been in business for over 175 years. So if you count Grady's age and my age, and some of you guys' age, between the three of us, we're not even 175. So that means it's a long, long time. Okay.
Yeah.
So now you go to the agents right here. And log in. Yeah, they always ask me for this type of thing. All right. All right. So illustrations. So you got here, what we do is we go to the first thing that we do, we go to an illustration. When you jump into it, that's pretty much the trick. You're gonna go there, you're gonna go to new illustration, then you're gonna pick the state that you're is gonna always go to your state. Then you can pick whatever state you like. So let's see that we're gonna do Arizona.
There you go. Okay.
Do Arizona right here. So we'll do that, and then we'll do always pick Flex Life. That's Index Universal Life. Then the first one. So that would be the one that you want to pick.
Why is there so many? Like, is it as a
there's different products, like there's annuities, there's different. So you want to concentrate on just one that is the first one. The second one is just for New York. So that one you don't want to pick.
Yeah. Communist Republic in New York. We're not going there.
Nope. No, New York is not a very.
There's some New York agents that crush it, but they only sell in New York. And then there's a bunch of agents that live in the other 49 states that are like, we can never sell in New York. So got it.
So we're going to see Grady Paulson's policy.
Oh, let's see it.
Please, your date of birth, Grady.
12/19/1983.
1983. All righty. And then so you're basically 40 years young. So you're 39, you'll be 40 this December. So the big 40. Actually, my birthday is tomorrow. I'll be 60 tomorrow. So I'll be like
happy early birthday. Throw some happy birthdays in the chat below. Throw on some love.
So now we usually leave everything here. Typically, that's the way that you want to leave it. Different, but let the company decide. As far as like, I will ask at this point, do you take any medications, Grady? You take anything? Like nothing? Do you have you had any problem with the law, like DUI, felonies, anything like that? None of that. Okay, great. So you're a great candidate for this type of stuff. So we're gonna design one for you. We're gonna put death benefit and funding, this part. Okay, now there's 3 different ways to design an IUL.
Okay.
And what we're gonna do is the first way we're gonna design is this one right here. This is the minimum death benefit with the maximum cash value. So what we're doing here is we're maximizing your cash growth, so we're minimizing as little as we can to buy on life insurance.
Okay.
So let's see that this is just an example that someone was funding an IUL with $1,000. Okay, that $1,000 will be broken down into 2 pieces to do what we call the benefit part. And then the second one is the growth of the money. Now, let's see that this is just an example that $100 goes into this part, which is the life insurance and the protection. And this one goes, then over 900 goes into a growth of the money. Okay. So when we do that, we're basically putting as much money as we can on this side. We put as much money on. So that's typically 95% of the people that want to do that. The rest of the other 2, this one is for people that probably looking for extra life insurance. Maybe they want to protect their home in case they die or they get sick. and they need a little bit of extra life insurance. This one is for people that may need a lot of extra life insurance. So number 3 is for people that are kind of like looking for $1 million life insurance or something bigger. That could be this. That means they're spending more on life insurance than number 1. So in your case, Brady, I imagine your main goal is to grow your money.
Yes.
Perfect. So we're gonna use number 1, and what we do is we go right here, we click on number 1, and that's gonna be right there. The next thing we're gonna do is we usually fund the IUL monthly, and some people, they do monthly, plus they also do a lump sum. They may have a $10,000 or $20,000 in the bank, and they may want to bring it in to an IUL. They ask me, hey, Juan, can I bring in my money from the bank to an IUL? I say, yes, you can. So in your case, Grady, give me an idea. Will you be bringing mainly some lump sum with the monthly or just the monthly part?
Let's just do, I mean, I could probably put in 10 or 20 to start.
Okay. Great.
And then,
what will you say the monthly with minimum amount that you could do per month and maximum amount that you could do per month?
Let's just say 2,000 to 3,000, somewhere in there.
Okay. So we'll start with 2,500. Okay. All righty. And we'll do to age 65. So as you guys can see, I put 1 through age 65 instead of, because I'm gonna try to fund it only until the person retires. They can stop before that, but that's where I'm gonna put them. That way I can show them the illustration. Second thing I'm gonna do is I basically can leave it as level, but because Grady basically is young, I wanna also do something for him where I'm gonna basically do an increasing, and I'm gonna do an increasing until age 66. And I'm gonna show you why I do that. And now, Grady, if you will say, like, how much will be like the maximum amount that you think you could put per year or dump into something like this? Like right now, you're doing about 30,000 plus 20,000, so that's about 30 plus 20. That's about 50,000. Will you think you put more than that, more than 50,000, or less than 50,000?
I mean, that's probably, I don't know what the future holds. You know, the boss is riding me hard. I might go start my own thing in this new business. You know, I don't, right now, I think, because we're talking about hypothetical Grady.
Right.
So, you know, safe Grady of who's saving 2,000 to 3,000 a month is probably something that I'm, as a consumer, pretty comfortable with.
So I'm gonna reduce a little bit of that. That way we can grow your money faster.
Okay.
So we're gonna do, let's see. Yeah, so that will give us about $60,000 that you can put per year into the IUL, and it will give you a pretty good growth. So if you go to quick view, we're gonna have, first of all, I'm gonna go through these numbers with you. So the first thing is the model premium. That's what you put in per month.
Okay.
Now this can go down or up. Up is better than down, but you can go down if you wanted to. Because this is actually the cost of your life insurance. This is giving you $1.2 million of life insurance. So if something happens, God forbid, to you next day, your family gets one free.
Forever.
That's basically what the first bucket is. But
okay.
Your cost of that is not $30,000 that you're putting per year, is only $5,300. So the rest of that is going. And so if you wanted to pay a less amount, you could, but then you have less growth on the money.
$440 a month in life insurance, and that means that 2,000 is going Yeah, just like you said. So about 15 to 20% is going to life insurance, and then 2,000 is going to my cash bucket.
Exactly. And then you can put as much as close to, $59,000 per year for the rest of your life. And that will be great for your policy. You will be basically paid out very quickly. If you were to do that, you will be max funding your policy. So you can actually dump another 29,000 into the policy if you wanted to. So when we get this approved, you can dump in the $20,000 that you told me that you have in the bank.
Okay.
So you're funding it with $30,000 per year. Now that $30,000 is coming in. Now your cash value is going in right here. And if you see a year 30, a year 10, you have 321 or 322,000. So you already gained $22,000 in interest on 10th year. Now, let me ask you this. If you have left that money in the bank, do you think the bank would have given you that much interest?
I don't, probably not.
Yeah, usually not. And the main thing is you have also attached to it this huge.
There's no life insurance from the bank.
Yeah, exactly. Something happens to you. The cool thing is you have that money right there that will be transferring to your family. Now, as you're saving that money, look at, you started with $1.2 million in life insurance, but since you have a cash value accumulated of $24,000 the first year, that money is going to be transferred into your death benefit. So you can see 1.222. So that means your family, opposite to a whole life where they only get life insurance, the death benefit, this one on the IUL, they get their life insurance plus they get the cash that they're saving. Okay, so that's one of the great things about that. People can actually 10 years down the road, you have saved basically 321,000. You have 1.521 for your family if something happens to you. So you're transferring everything tax-free to your beneficiaries. So we don't expect that to happen, but in case something happened like that, the other part is you have this money growing very good. It's growing probably around, on average, it's growing about 6 to 10% interest. Now that 6 to 10% interest is gaining and you're accumulating that. Now this section is what you can borrow from. So we don't expect people to borrow the first year out of these policies, but we expect people to start borrowing after the 5th year, for example. Then the 5th year where you have a pretty good amount of money that you can borrow. You can borrow about 118,000. You can borrow 156,000 the next year and so forth. Now, as you can see, after year 10, you have the same amount of borrowing as you have in cash value. Why? Because the surrender period is over. That means your policy is paid out. Your policy can stop paying this on this year, and your policy will be continue to grow your money, and you have your life insurance paid for the rest of your life. Now let's go back to clean this up, and then we'll go through. As you can see, by year 65, Grady, if you keep putting the $2,500 per month, you have $1.5 million available for cash and $2.7 million of death benefit if something happens to you. Now you can do a tax-free retirement at this time. And if we do a tax-free retirement, you'll probably get over $120,000 per year tax-free.
Oh, wow.
Do you think, Grady, that you could live for $120,000 a year the rest of your life tax-free?
I would try hard. I could have to cut back some of the kids' activities, but we would
no, by year 65, you probably
no, that'd be fantastic. Yeah, yes, I definitely could with no children at home. That would be
no children at home. Your home will be paid for. Your cars will be paid for. No debt. At that time, if you have 120,000, you just go and whatever you extra you have saved, you can go travel the world.
I love it.
So that's a good tax-free retirement, much better than the Social Security.
much.
And now, if you want to show somebody the actual tax-free retirement, you can go here and distribution, and you solve for income. So when you solve for income, it goes and it solves it for you. So it tells you exactly how much that person is going to get tax-free the rest of their lives. 126,000.
Wow.
That was pretty close.
You're a good guesser, Juan. You know your stuff.
So that's the rest of your life. You get that money. Now, whatever is left over, let's see that you die at 95. And you basically have taken all that. By that time, you will still have a death benefit of $179,000 that will be transferred to your family tax-free.
Wow.
Even though you already spent a bunch of extra money tax-free for the rest of your life, okay?
So I put in over 26 years, I put in 26 times 30K. I put in $780,000 over 26 years. By the time I'm 70, I've nearly pulled out all the money that I've put in completely, right? What's 126 times 5? We'll do 126 times 6.
126 times
756. So in 6 years, I've pulled out all the money I've put in, and I still, at year 71, level $1.8 million death benefit.
Exactly.
So these are like, why doesn't everybody have one of these?
I have no idea. I was sold into this. I bought two of them right away, and then last year, after I bought one at age 59, I basically had a heart attack. So it's kind of like right after that. So it's kind of like, I'm so glad that I got it before I had that issue. So you never know when things will happen to you. I was totally healthy. I was preferred, no medications. And then I went to see Zach in Denver, had a heart attack. So,
did he make you go run a 6-minute mile and go bike?
No, like he made me go 60 miles on bicycle and all that. No, I'm just kidding. Yeah, I don't know what happened, but that accelerated my whatever was happening with my body. Wow. So that was good.
But so as in good taste, you now having gotten those policies, you wouldn't be able to get them today because you just had a heart attack.
Exactly. That's what I told.
We got to communicate with our clients, right? You're only one prescription away. You're one doctor's appointment away. You're one day away from becoming uninsurable. The best time to get insurance was yesterday. Second best time is now. So
exactly. That's awesome. Another thing that I talk to them about. It says, and I tell them my story. I tell them a couple of other stories just in case they think that they have the rest of their lives. And then now, how to become their own bank. So if you're basically wanting to borrow money, let's see that, Grady, you have all this money right here, all this cash in here that you can borrow. Now, let's see that you wanted to, I don't know, you wanted to purchase a nice car, $100,000 car. Okay. And you have $100,000 to borrow from here. Now, you're not going to borrow from your cash value. Your cash value will be intact. That's still going to continue to earn 6 to 10% interest on average. But what's going to happen is you're going to lend it out of your death benefit. So your death benefit is going to reduce by. So instead of 1.3 million, you're going to have 1.2 million right here.
Okay.
And then what's going to happen is they're going to lend it out of the National Group money at a low interest of 4%. Now you're really paying you're paying 4% out of that money, but you're earning still 6 to 10. So if 1 year you earn 6% and you pay 4%, how much are you still earning on that 100,000?
2 to 6%.
Exactly. So now, if you had loaned that money from Chase Bank or from Wells Fargo, and you went and bought the car at 100,000, you would have had to pay basically for 5 years about $2,000 every month to the bank. Now, that payment would have come. So at the end of 5 years, if you would have done it the regular way, you would have had your car paid out, but the bank would have had your money and your interest. Now let's go back to Paulson's private bank. Paulson's private bank has the money right there. You're gonna lend it out of Paulson's private bank, the 100,000. Because you did that, you're gonna pay for your car cash. You have a better negotiation at the time too than borrowing from the bank. You can lower the price on the car. That's first of all. But the other thing is now you're gonna pay the $2,000 back to Paulson's private bank. Instead of that $2,000 going into a bank, it's going to your bank. And now you're gonna pay it off within 3 years. Now you're gonna have your car paid out, you're gonna have your money, and you're gonna have your interest. That's when you become your own bank.
That's fascinating. So is that something you can illustrate, or is that something that that's where it just comes out of the surrender value?
Right. That's pretty much what I tell the clients. This is basically an example that I do early on. Car is one of the things. You can do that for a home or an Airbnb. You can do that for a building later on. So Grady, if you had a $600,000 to borrow, will you keep it in there, or will you be doing business with that money?
I do some business.
Exactly. Most people will buy equity. And then so if you have that money, you're gonna multiply. So instead of you retiring, Grady, with $1.5 million, like most people will do on a 401k, you're gonna retire probably with over $3 or $4 million because you multiply your money by doing business with the equity. You buy homes, you rent them. You buy buildings, you rent them, and so forth. By the time you're 65, you will be much better off than if you had it in a 401k.
That's awesome. Wow. Wow.
So now the last thing that I show people is this one, a report. You run the report right here. And this report shows basically, I like National Life Group because of the easiness to show the program that they have. They have also an app for the clients that they can put more money and so forth. So if you die, you basically have a big benefit, $1.2 million or more early on. If you live very long, the good thing is you're gonna have a lot of money that you can use throughout your life, tax-free. And the last thing is if you become ill, any type of that, then you're gonna have access to about 80% of your death benefit while you're still alive. So if you basically put in $2,500 per month, $1.2 million goes to your family the next day if you die. That's not gonna happen probably. Most likely you're gonna live very long. Age 69, close to $2 million that you're gonna have access to. Age 74, 2.7 million. Age 79, 3.7. Age 84, 5.2 million.
I'm gonna go if I'm 84 and I got 5.2 million, I'm gonna go see the Titanic. So that's that is incredible. If I go, I go, but at least I'll have said, I saw Jack and Rose down there.
I know it's a pretty cool.
This is a beautiful illustration. It just makes it makes the complex simple.
Right. And then the last thing that I show is the living benefits. If you have an Alzheimer's disease, no other company covers Alzheimer's disease except National Life Group. $1.5 million. Huge. They just added this year. Critical injury. No other company covers critical injuries. National Life Group covers $1 million, up to $1 million. A critical illness, heart attack, stroke, kidney disease, one of those, up to $1 million. Chronic illness, you lose basically 2 of the senses of the main body, eating, walking, so forth, $30,000 a month. Terminal illness, 1.5 million. So as you can see, this policy, Grady, is all about you when you're alive. Okay. Now let me ask you this, Grady. Do you have anything like this on your portfolio right now, like the IUL?
No, nothing like this.
Would you like to have something like this on your portfolio?
I definitely would. How do we find out if I can get approved?
The next thing we do is we'll send out an application on your behalf. I'm going to help you fill that out. It's going to take about 15 to 20 minutes for me to help you do that. But the part is you're not going to be approved right away because this is something that they have to look at your HIPAA. That means they have to look at your medical history and your criminal history. If you're clean, they're probably going to accept you much faster than if you have records. But it takes up to 45 days for approval.
Okay.
Now, some people are approved what they call instant underwriting approval. That means the computer sees no records, they instantly approve you, and within a week, you're approved. Now, if we send out for approval, Grady, is it okay we send it out for the 2,500 or a little bit less or a little bit more?
2,500 is fine. That's the goal,
Great.
right?
Then I just click on I go and I start my application. That's it.
Wow. Juan, this was drop some JFs in the comments below to show Juan Franco some love, because that was a masterclass on how to present. And you're doing this. Do you do your presentations on Zoom like this so the client sees everything? We're 100%. We're hand in hand.
100%.
This is it.
100%. Yeah.
How many of these do you do a day, a week? How many presentations? What's your goal?
4 or 5 per day. I used to do about 8 or 9 per day. I am not working as hard as I used to on presentation, but I'm doing a lot with my team. I basically will say 20 presentations per week I'm targeting, and then about maybe out of those, sometimes half of them show up.
Got it.
Not like everybody. So I will say the closing ratio on this is pretty high. The way that I do it, you'll be closing about 50% or more of the people.
That's awesome. Just finding people. So get leads or work through your current clients. I mean, heck, this is something that for any of our new agents, you could present this to a brother or a sister or a colleague. You could get one. Hey, the best way, people are like, how to learn the e-app, Juan? Well, do you have a policy on yourself? You can just start there. Start there with $100 or $200 a month. You can always get another one, right? We're not a company that goes, we demand you to go buy a policy sold by your manager so they make a commission on you. We don't do that here. But good advice would say own what you're selling. And if you plan on, self-generating some income or creating tax-free retirement for yourself, and this interests you, go into National Life Group and write a policy on yourself, write one on your spouse, write one. I mean, what are the age limits? Can you write them on kids?
Yeah, you can write 2 weeks old up to 70, 80 if they qualify. The main thing is I'm amazed. I'm gonna be 60 tomorrow, and I'm amazed that the average age on FFL is probably less than 30. So I just wish I was you guys' age with this opportunity, because I have had companies, I have had industries, and I have had failures and for things that I basically I wish I had in this business when I was you guys' age. So the opportunity that we have right here is tremendous. You can actually not only help people, but you can help yourself. If you don't have an IUL, you're crazy. I just wish I would have had more IULs before.
I love it, Juan. Well, Juan, thank you so much for your time. I know you've got presentations and a team to get back to, and I couldn't be more appreciative of you carving out a few minutes for us here today. I look forward to, maybe an update in the future, 6 months, get you to see what new goals you've hit. And just appreciative of your time, sir. It was a true pleasure, and you make the complex simple, my man. So thank you for your time.
Thank you, Grady.
All right. Have a great day, brother. Talk soon.